Bitcoin, perfect parallel, right? In this chaotic world that we live in, and with everything going on and all the fiat systems, flaws, we're kind of vulnerable as workers just in this chaotic world, and we're primed to just be taken advantage of. Well, Bitcoin is very similar to like the firefighters' protective gear, our training. It allows us with some commitment of time to have like a safe shelter in this chaotic world. So I think it's a perfect fit for firefighters to learn about this tool, to discover it, to hold it, to help build the ecosystem, because it's very similar to what we do for work.
So firefighters, just like teachers and police officers, state workers, and many other people, they rely on pensions. Can you talk a little bit about that and how important it is for pension funds, small and large, to start to look at Bitcoin and take it more seriously?
Yeah. So in the short term, as workers, we trade the most precious resource we have, which is our time on this earth. And we trade that for money so that we can live, right? Buy groceries, go on some trips, have a place to live, etc. In the long term, we trade an entire career of our youth. If you think about the working age, from 20s to your mid 50s, yeah, you get to do other stuff, but you're a third to a half of your life is at work. So you're trading huge aspect of your life, in the hopes that at 55, as you're kind of older, you're ailing a little bit, you got the injuries, that you're going to have a good retirement where you can enjoy the rest of your life. Pensions are that vehicle to provide that, or retirement funds, 401ks, etc. And so, right, when that goes wrong, it's a huge loss to the plan for the worker. Here's a crazy stat, because I know you love history. 1900, 50% of Americans owned their own company or business in 1900. And this was even after the start of the Industrial Revolution. Fast forward to now, 7% of Americans own their own business, right? So most workers are just dependent on these mechanisms when they don't have a company that they can sell, or just people are working there. So pension health and longevity is critical. And as we know, there are a lot of pensions that are in tough spots, and the system has a lot of cracks in its foundation. And so, Bitcoin is something that can help pensions keep pace with these liabilities, which are growing and affected by things like longer retirement, like people are living longer in retirement. Traditional like investment vehicles no longer deliver and keep on pace with inflation. And so they have to adapt, they have to evaluate the structure. And Bitcoin is something that I think we all know what's going to happen in the next 10 years. Bitcoin is going to grow incredibly. It's going to continue to be adopted, and it's going to be this great, protocol, network, and asset.
I don't know if people watching this or listening to this saw the interview with about the Wisconsin pension fund. It was with a Marquette University professor talking about why they decided to allocate to Bitcoin. But it was really interesting because if you listen to the full thing, they only allocated like 0.1%, right? But it was still a significant number. But they said that they were able to do that because it was a fiscally sound pension fund, and they had the ability to sort of play around and allocate to this new asset class, whereas others are severely underfunded. Can you talk a little bit about the economics? Because I know you're doing a lot of outreach. You're talking to lots of different pension funds. First of all, why are some of them so severely underfunded? And is that a barrier so they cannot adopt Bitcoin as easier as the ones that are more fiscally sound?
Yeah. So super interesting point. Prior to the financial crisis in 07, 08, and when the housing crash and all that, your average U.S. state and local pension was funded in and around the range of the low 90% range. And for those listeners at home, what we say by being funded at a percentage, it means that the pension has on hand 90 something percent of the money that will be needed for all of its obligations, which are the retirees. So that's a healthy amount that they have, right? As you dip lower towards below 80%, you have less money, and there's a cost to not having all of that money on hand. There's a cost of carrying what is called the unfunded liability. After 0708, the average US state and local pension was funded in the high 60s, low 70s. So a huge drop, hugely impacted by that financial crisis. The interesting part is, after the longest stock market run in history, you would think that that gap would have been closed, but it was not. It has not been closed. And
Why?
today, well, you know, obviously, like any traumatic incident, right? You get very cautious, and
Mm,
after getting hit by such a massive blow, um, you know, uh, I think pensions were very cautious. A lot of them missed out on the private equity markets on this massive run. Some of them are just starting to get into private equity more now, which
mhm.
is concerning because do we, is the best years of private equity behind them or not? We don't know. Um, and then you have liabilities growing in those 10 or 15 years. You have a shift in the vehicles to keep pace with those liabilities. So, if your average retirement person lives from, you know, 75 and the average year is 80, that's a cost. So you need to have a better performing asset and portfolio that can keep up with those. So there's a lot of reasons why that gap hasn't been closed, but it hasn't been closed. And so I don't see how it will be closed. It's important for Wisconsin, and I'm so, we had the one of the board of trustees on our show, the Nakamoto Gauntlet, which I did with Hoffa
Mhm.
and Joe Carlasari and Greg Foss, and we had them on 8 months. And so, there's a lot of factors that went into them doing that, but like it's great to think maybe we could have offered a little bit of education prior to that. But it's really cool that Wisconsin did this because they are a healthy fund. 0.1% of their total portfolio is something they can afford to lose.
Mhm.
It's We don't see Bitcoin as a risk, and so when people talk about, well, they're well funded, they can afford to take the risk, we just hear like, no, wait, they're not actually not taking a risk. This is such a solid performing asset, and the potential of Bitcoin is so enormous. It's actually the one thing they have that isn't a risk. And so I think people need to look at it more like that. Here's a well funded pension plan that's making the right moves, and they're decreasing their risk, whereas the underfunded pensions carry actually more risk right now. And so,
Yeah.
yeah, there's it's a lot. I mean, I could go a lot into pensions. It's very complex, but
But
it's important.
do you think that the ones that are underfunded and struggling a little bit, do you think that they will also start to allocate to Bitcoin, and how do we get there?
I think when we talk about the risk they face, it's the career risk. So imagine me and you manage pensions, and we all know there was a 10-year media campaign blitz against Bitcoin, all
Yeah.
negative. Like
Mhm.
Bitcoin sneezes and they say it's over, right? And Bitcoin's dead 1,000 times over. Okay. We manage the pension funds. Let's just say, Natalie, you're an all-star. Your pension fund is like 100% funded. Dom, I've had a tough run at it, and my fund's 72%. Well, we both are going to adopt Bitcoin, and we know that the people who've been watching that media, they're going to react. They're going to go, Natalie, you're so reckless. How could you adopt Bitcoin? You're gambling with the workers' money. What are you doing? And you're saying, guys, I got this. This is
Yeah.
100% funded. Like it'd be one thing if we have a problem, but we have this. Dom, they're going to go, you see why the pension's in so much trouble? These degenerates are risking with this asset that we don't understand. And
Mhm.
so that's where the roadblock is. But those underfunded pensions actually have the best chance of catching up their funding status by
Exactly, they're
adopting.
the ones that need it the most.
They need an aggressive Bitcoin strategy. And they also, for some of them that are so badly underfunded, like the state of Illinois, their top five pensions are like terribly funded. I want to say in like 50s, maybe 40s, 50% funded. Dallas, their pension fund's like 44% funded. It's like some of them are
Wow.
past the point of recovery. They need to rebuild a new structure that
Yeah.
takes the new financial horizon into account.